Hi there, good morning. You've tuned into ET Now, and this is Buy Now, Sell Now with me, Shel D'Souza. Along with me, I have Snehi Shah. Very good morning to you,
morning,
Snehi. But yes, today's show is going to be a little different. It's not just another day in the markets. It's my last day on this desk, my final show with ET Now, almost 11 unforgettable years, 4 incredible years of anchoring Buy Now, Sell Now. Well, we'll still bring you the top trades, the sharp insights, all that you expect, but with a little more heart today, as I say thank you and goodbye. So let's make this last one count, Snehi. And what are the markets doing today?
Absolutely. You know, Cheryl, markets seem to be cheering. Slight bit today, wow. It's just a 0.2% uptick coming in on the markets right now. 24,590 thereabouts is where the Nifty is at right now. We have been seeing some weakness in the market, but we have held on to that shade of green right now. We're inching towards the day's high, but not quite there just yet. Sensex as well, 0.2% higher. What's seen another cool off of 4.5-5% is the India Wix, now comfortably below that 16 mark. You have Nifty Bank that's absolutely flat with just a hint of a positive bias coming in on that index. Let's take a look at what the broader markets are up to and if they are underperforming or outperforming the markets. It seems like Nifty Midcap is outperforming the market by a bit, a 0.3% uptick coming in on that index. Nifty Small Cap once again outperforming the breadth of the market by quite some momentum, 0.5% uptick coming there on the Nifty small cap space. Gainers and losers that are influencing the index moves today: Bharti Airtel 1.5% uptick, Tech Mahindra, Shriram Finance, all of these are doing well. On the flip side, pressure coming in from Sun Pharma, Trent, NTPC, Titan and ICICI Bank along with ONGC. Some stocks to talk about: we've seen major block deals coming in. You have Spark, which is Sun Pharma Advanced Research Company, that has taken a nosedive in today's trading session after their psoriasis drug has not lived up to their testing expectations. So that stock is lower in today's trade. That's Spark, the stock that I'm talking about, that one taking a hit. But you have a lot of other stocks that are in focus, the likes of Alchem, maybe FRL, more stocks, Tata Tech in focus on the back of block deals. All of these stocks are up and abuzz in today's trading session. So basically that is what the market breadth is looking like right now. And sectorally, media continues to outperform the market, but shockingly Nifty Realty has ended its dominance and it's the biggest loser on the street today. A 0.6% cut coming in on Nifty Realty, followed by FMCG. These are the only two indices in the red right now. The rest of the market seems to be holding on to some shade of green, led by media, IT, auto. You have metal, PSU, banks, pharma and banks absolutely flat, but with a slight hint of a positive bias. So that's what the market is shaping up to be like right now, Cheryl.
A lot of action happening in the markets, but let's try and take all of your stock related queries. Remember, viewers, this is a show where we get you answers for all of your stock related queries. You can write to us on the WhatsApp number that's flashing on your screen, and each time you write to us, do remember to mention your name, the stock that you're looking to invest in, mention that name as well, along with the buy price, the quantity and the time horizon. With that, our experts will be able to help you better. And talking about our experts, especially today on the show, I have Kunal Bothra, who's going to take your queries on the technical front, while we have Mr. G. Chokalingam, who will take all of your queries on the fundamentals. Thank you so much, Mr. Chokalingam, as well as thank you, Kunal, for making time out to address all of the stock-related queries. And let me kickstart taking the queries then. And the first query is coming in from Kaushik, who's writing to us from Mumbai. And Kaushik wants to know about ABFRL. If it's good to make a fresh entry into this one, Kunal, right now, and add on to TCS as well, because he has TCS in his portfolio worth about, at the price of around 3,217.
Yeah, Shelley, before I addressed the, the query, I think, it's been a great journey with you, of course, with you anchoring, BNSN, as well as other shows on ET Now, and I'm sure that I'll definitely miss your positive energy as well as the dedication which you've shown for the channel. So wishing you great success and happiness in your next chapter. Yeah, so coming to the queries, two stocks which you which the viewers asked, one on ABFRL and the other on TCS. I believe that ABFRL is something which I believe has underperformed. So not too much excited with the short-term chart prospects for ABFRL. I will give it a skip or maybe an avoid at current levels. But TCS is a buy from my side at current levels.
So much for that, Kunal. Thank you so much for your kind words. And yes, I'll miss working with you very closely, miss all of our behind the scene sort of jokes that we keep cracking. A lot goes behind the studios, behind the screen, off air. But thank you so much, Kunal, for those kind words. Now you can take the next query.
let's move on from there. And Mr. Chokalingam, hi, welcome to the show. I'll come to you with this query. This query is coming in from our viewer, Mr. Neeraj Verma, who's a senior citizen, is writing to us from Assam. His query is on Federal Bank, wherein he holds 200 shares of that counter. What's your view on Federal Bank?
Yeah, it's a good quality bank, world private sector bank, in existence successfully for several decades. I don't think the stock can give a phenomenal return, but definitely for medium to long term, that is beyond 2 years, it can certainly keep adding, the significant return to the investors. So it's good to hold for medium to long term.
This Federal Bank for the medium to long term. Let me come back to you, Mr. Chokalingam. This one is coming from Komal, who's writing to us all the way from New York and wants to know about Vedanta, about 300 shares of Vedanta at a price of 489 rupees per share for the longer term. Can our viewer go ahead and add some more about Vedanta in the portfolio? What's your take on Vedanta? Because a lot has happened in this one. The fact that they had the corporate restructuring as well. There were some concerns on debt as well for Vedanta. That's one of the reasons why the stock could never perform well. But for the long term, do you think it makes sense to add some more?
For long term also, it would be better to look at stocks like Hindalco or Hindustan Zinc. As you rightly mentioned, debt is one issue. Second, on a consolidated basis, it also has, the oil business, crude oil business, and crude oil is down 20%. OPEC is continuously increasing the supply, so there is a possibility of oil price going down further. That also would be negative. So, considering the balance sheet, quality and outlook for oil, I would prefer, Hindustan Zinc from the same group, which has got a silver business, which is close to, the 45% of the profits are from silver now, and that is more stable than these other ferrous metals. So therefore, I would suggest Hindustan Zinc or Hindalco as an alternative to Vedanta based on my relative valuations.
Okay, so that's the take coming in on Vedanta. Let's move on from that. And Kunal, coming to you, our viewer Gopi is writing to us from Chittoor, Andhra Pradesh, holds Canara Bank at a buy price of 98 and is asking if it's a good time to hold on to this stock for the next 3 to 4 years, and what's the target that you are spotting for this one, Canara Bank?
Yeah, very bullish on the PSU Bank in a sector also overall, as well as Canara Bank. And the best part which I'm liking about the stock is in this last 2-3 months of the price movement, it's up 30% in this last in this ongoing quarter for Canara Bank. And with this 30% up move, the stock has managed to engulf the previous 3 quarters of underperformance, consistent underperformance. So we generally say that to try and make a comeback, optimism always beats pessimism. So when you see such kind of a strong optimism on the charts, it generally indicates that the stock is or the trend is here to last for much more longer duration. Now, with a longer term time frame, becomes difficult to give a targets, but I am extremely optimistic. I think that the stock should be able to surpass above its even life high levels of 160, 180 plus over the next 1 to 3 years.
Let me take this next query then, and this one is coming in from a viewer who's not shared the name, but a viewer has Vipro, purchased Vipro last 3 years ago, before at a price of around 500 rupees per share. Despite the stock split, the price has not seen that much of an appreciation. What to do? Should go ahead and buy some more, sell the exit out of Vipro? What sort of strategy should one use, Mr. Chokalingam, when you talk about Vipro? Because yes, if you talk about the IT pack, this has been a laggard.
Yeah. So large IT stocks are expected to remain, subdued in terms of performance on the market. Because the whole IT industry is growing exports in dollar term in poor 2 to 4%, and Wipro is not an exception. So I firmly believe that the wealth creation opportunity from the large IT stock is over quite some time ago, more than 2-3 years ago. There is no change in that view. But however, Wipro has been beaten down a lot from 50-week high. So there could be a tactical opportunity for some rebound. And, if 10 to 15% rebound is possible purely on a tactical ground. If such thing happens, one should exit the stock and move to, promising growth sectors like banking industry, something like, State Bank of India or HDFC Bank. Of course, growth is lacking, but with possible listing of its NBFC, it should get a tactical boost. So that should be the strategy, moving away from a large IT stock to promising growth-oriented banking sector.
Okay, so that's the take from the shift from IT to banking. But Kunal, let's come to you and give us a chart check on ITI Limited. We don't have the name of our viewer, but they've been holding 1,564 shares at 364.5 rupees, and they've been holding very recently. 30th May is when they got the stock, almost a few days ago. They're asking what would be your suggestion to sell or to continue holding?
See, I think it's a very, very volatile stock, and I'm emphasizing on the word very because just start of this calendar year, ITI was a stock which was around 550 levels, and in a matter of 1.5 month, the stock fell down by 50%. Even when you look at the historical charts, the stock has this tendency of moving into 200 to 250 points. So you really need a very, different kind of a risk appetite. And my assumption is that if you are that kind of individual who has that kind of a risk appetite, only in that sense I would suggest maybe a hold on ITI. On the upside, I think once the stock breaks past about this recent resistance that's around the 380 mark, you can probably expect the stock to move towards the 400 to 450 club pretty quickly. But as I said, that the only concern, or rather the biggest concern for the stock, is that very high nature of volatility.
Let's take this next query coming from Rajesh. He's writing to us from Muscat, who's from Oman, that is, and he wants to know about Tejas Network. He's bought it at a price of around 1,170 rupees per share, Kunal. He wants to know whether he should wholesale or average this particular counter. We've seen the rise of Tejas Networks, and then we've also seen a sharp correction in this one, after which it's not been able to actually see that good jump up. What's your take now?
Cheryl, I would suggest to exit. I mean, I would suggest the viewer to exit the stock. I understand that the stock is perched at its 52-week lows or maybe closer to that, but it doesn't look like that the stock is going into any kind of an immediate resurrection. Looking at the charts, in fact, the concern for Tejas Network is that the quarterly charts, which is the current ongoing quarter for the stock, has seen one of the highest volumes, and in this quarter, the stock has fallen from 900 to now 700 levels. So this indicates that there has been a major volume-based sell-off which has happened for Tejas Network. So purely looking at the charts, and especially the last 3 quarters, I think it's an underperforming name, would suggest an exit.
Okay, would suggest an exit on Tejas Networks as a take coming in from Kunal. But Mr. Chokalingam, we'll come to you, and it's a stock that you have been very bullish on, and that's Bank of Maharashtra. We have our viewer NV Thiagarajan who's writing to us, and he's asking about Bank of Maharashtra. He holds 1,000 shares at 64. The stock has been quite subdued. We saw quite this run up coming in the stock a couple of days ago, where the stock was up by almost 7%, but it has fizzled back down from those levels once again. So he's asking, please advise whether to hold or wait for an upward movement or convert to any other stock. What would be your take? Does this bullishness on Bank of Maharashtra continue?
Yeah. So Bank of Maharashtra is part of our research coverage, and we maintain the buy recommendation purely on the basis of fundamental factors. The latest Q4 result was very, very impressive. It is one of the best listed banks in the entire space, because net NPA is just 0.2%, and outstanding net NPA is just a fraction of annual profit. So very few banks have that kind of credential, and also the business is growing much faster than the industry growth, and therefore I continue to believe that the Bank of Maharashtra is one of the most conviction stocks among the banking industry. And also one has to remember the fact that many private banks are struggling to retain the low cost CASA deposit, and Bank of Maharashtra is sitting on a very high percentage of exposure to low cost deposit. That is also going to help. So we maintain a target price of around 65 rupees for Bank of Maharashtra.
Alright, so that's the take coming in on Bank of Maharashtra. A lot of you are actually writing to me to say that you miss me, and I must say thank you, Gatri, Smita, Vikram, who's written to us, as well as we have Satya, who's written to us. Thank you so much. It's actually difficult because for me, all your viewers are a part of family, and every time I take your query, I've made sure that I've also felt what it feels like if you've lost money or if you've made money. So thank you so much for making me part of your daily dose. Basically, just like the way you have a coffee every morning, I'm sure all of you all tune in 11 a.m. to watch Buy Now, Sell Now. But yes, we will continue taking your queries right here on Buy Now, Sell Now. The show remains. We have the legacy of taking forward your stock-related queries to our experts. That will remain. So don't worry. Let me take the next query then. And this next one is coming in from K.S. Manyan. And he wants a view on Varun Beverages, Mr. Chokalingam.
So Varun Beverage looks quite attractive after the major correction. No, there is no doubt. But only point is that my view is that it may not go back to very glorious days, because the whole FMC sector is moderating its growth momentum, and the competition is also emerging. So definitely it's a buy. Maybe around 15-20% maximum upside is very much possible in a matter of about 6 to 12 months period. That's my research view.
Okay, Mr. Chokalingam, we'll shift focus from FMCG to cement. Next question, we don't have the name of the viewer, but their question is on ACC Cement. They bought shares at 1,920 and asking what's your outlook on the company for the next 2 to 3 years. Given the kind of moves we've seen in the cement space, the kind of competition, consolidation, what's your take on cement and particularly ACC? And if you had to play the space, would ACC be your preferred bet?
Yeah, I believe the cement industry prospect should improve in FY26. There are reports of revision in the cement prices and pickup in the volume growth, and that should be beneficial to ACC. And second, ACC stock has been beaten down in the market by big margin. And third, its Q4 result is quite decent, and valuations have become attractive. So therefore, I would give a buy recommendation on ACC.
So that's the take coming in on ACC. Let me take this next query. This one is coming from Samrat. He's writing to us from Bangalore, and he's also been a regular viewer of the show. He has Titan at a price of around 215 rupees per share. He has Bharat Dynamics at a price of 463 rupees per share. Based on the charts, which one should he partially exit? Kunal, he's made good money in both of these investments, be it Titan or also, for the matter of fact, Bharat Dynamics. What's your take now? Which one should he exit partially right now for the funds?
So we say in English that good becomes better, better becomes best. So right now you are looking at good returns, but I think the best returns could be in line for both of these names. Depends on your time frame, depends on your time horizon. The extent at which you can hold on to the stocks, because both of them are quality names. Titan has managed to withstand the last 2 decades of a major series of outperformance, and the way the stock has performed over the last 2 decades indicates that this is a strong story to sustain as well as continue going forward. For Bharat Dynamics, what's working, of course, is the movement in the entire defense sector. Yes, on the short-term charts, Bharat Dynamics may look a little bit more overbought. You might see an odd phase of a correction because of the way many of the tilt is happening towards the defensive sector on a large scale. So you might probably see the stock going into a marginal correction. But I'm not sure whether you are looking at this as a opportunity to try and exit and then buy back on the lower side. If that's the case, you can do it. But if you're a long-term investor, I would suggest to hold both of these names.
Okay, so hold both BDL and Titan. Let's move on from that. And Mr. Chokalingam, our viewer is asking for a long-term view on REC and PFC. What's your take on both of these companies? Lots of news flow, lots of move and volatility is what we've seen in both of these counters. REC, in fact, in the last 1 month has taken a knock of 5% and PFC lower by 1%. So recent times have been rather subdued, but what's your outlook overall on both of these power financing companies, PFC and REC?
Both REC and PFC, I have tracked the stocks for last 10-15 years. Every time, once in 2-3 years, they get beaten down. They also reward the investors. And this time also, they both have seen a significant correction. But thanks to this correction, now REC is available at just 1.3 times price to book value. And PFC is available at 1.1 time price to book value on FY25 earning. So when you superimpose the growth of FY26 and 27, they would converge around even 1 time price to book value, which makes both stocks quite attractive with investment horizon of next 1 year.
All right, on that note, we'll slip to a break on this edition of Buy Now, Sell Now. When we come back, continue taking all the stock-related query, viewers. Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get your answers for all of your stock-related queries. We have our experts, Kunal Bothra, taking all of your queries on the technical front, while on the fundamentals, we have Mr. Chokalingam. And let's continue taking all the stock-related queries then. And this next one that I have is coming in from Ghosh Dada. Thank you so much, Ghosh Dada, for your kind words as well. And I'll take your query. That is 35,000 shares of Zamato, or now known as Eternal, at a price of around 252 rupees per share. He wants to know whether he should buy some more, what is the future. He had already booked profits earlier, no panic as such, but he wants to know what to do now. I'll take this query to both of you. First, let me take it to you, Kunal. He's saying that there is no panic. He's already booked some profits, but what should he do now, given the fact that Eternal has not performed well over the last few months or so? It's just marginal gains of about 6%. And when looks less compared to the rise that the stock had seen earlier.
Well, absolutely, yes. And, after a stock being almost 6x to 7x, from 40 or 50 was the low for Zomato towards 300 plus for such kind of a, steep upside, it's bound to be that, the stock gets into a phase of a correction. And in the phase of a correction, we always say good price and good news, they never come together. So it's the zone for, Zomato or Eternal where the stock is, going through that kind of a patch. But once the patch is over, I would believe that the stock should resume or restart its longer term uptrend journey. So it's a phase where the stock would consolidate. My sense is that maybe the stock would take another at least a quarter or a couple of quarters before it tries to break past above a series of resistances and kickstarts a major uptrend. So it's a good buy from a long-term play and try and accumulate as much as possible and use the dips, for the stock.
All right, Mr. Chokalingam, what's your take coming in on Zomato? No doubt, our viewer said that he's not in a panic mode, but the earnings were a big disappointment when you talk about Eternal's Q4 numbers, and looks like the future also would be a bit tight when you talk about all of these quick commerce companies. What's your take now? What should he do? Should he book out of it or stay put with it and just at least try to recover some more lost ground?
Yeah, before going to Eternal, I wish you all the best in your new ventures. It has been a great service to the retail investors in the country. Now coming to Eternal, normally I do not recommend such stock because I still not willing to compromise fully my valuation approach. But still, it is now part of the index, so one cannot ignore, and it trades at around 75 PE on FY27 earning. So little risk-taking investors can definitely accumulate the stock if it starts correcting even 5-10%. That's since being a part of index, it would also get certain allocation, and also there are a lot of set of investors who like this kind of momentum-driven new age stocks. So therefore, my view is accumulate on declines.
Accumulate on declines for Eternal, but Mr. Chokalingam, we'll stay with you. Next query coming in from our viewer, Mr. KSR Prasad, who's writing to us about his holding Raymond Limited. He holds this stock at 1,500 rupees per share, and he's saying that ever since he's got this stock, it's only been falling. He's heard that there's some issue related to a realty company. He's asking what are the prospects? Should he continue to hold or sell it? What's your take when it comes to Raymond Raymond Limited?
Yeah, unfortunately, I missed to track, post restructuring. I used to track it before restructuring, but now one company has given birth to 3 companies. I have not tracked, so I won't be able to give him my research view. I'm sorry.
Kunal, recent chart history we have for the stock after the demerger, but overall as a group entity, Raymond Limited on the charts, could you tell us what it looks like on the charts ahead?
See, again, chart history is a little limited, but then, on the overall group, I would believe that Raymond has been a classical multi-bagger. The stock, I remember, I think, tracking the stock individually. Of course, pre all the special situations at the demerger for Raymond, the stock was almost at 400. At one point, I think the stock moved towards 2,000, 2,500 kind of a zone. And now I think, the stock is price adjusted. It's come back towards 600, 613 mark. Raymond Realty, of course, is a part of it. So, but I believe that, the entire groups looks to be extremely attractive. I think that, this set of a stock, this group, should be held on to from a long-term play.
All right, so that's the take coming in on Raymond. Let me take this next query then, and the next query is coming in from from Sagar, and Sagar also has been a long time viewer of ET Now and Buy Now Sell Now in particular. He wants a combo view on Tata Alexi. He's holding about 100 shares of Tata Alexi from the levels of around 750 rupees per share. He's booked partial profits around 10,000 levels or so, but he continue to hold on for the long term, or better to exit completely. So since he's asked a combo view, let me take your view first. Kunal, what should he do with Tata Alexi?
See, short-term wise, the stock looks to be a bit on a slippery note. There could be a chance that the stock may come into a correction because the last two, three candles, indicates that the stock is threatening to go below the 50 DMA. If that happens, it might impact the near-term trend for the stock. But then, when I look at Tata Elxsi, it's been a different beast altogether. The way the stock has recovered more than 40% or 35% to be precise in this last 2 3 months indicates that the stock would probably find its mojo back on the long-term charts pretty quickly. So if you're a long-term investor, I would suggest to hold on. But if you're a short-term investor, just brace yourself for maybe a short-term correction.
Mr. Chokalingam, let me come to you, but before I come to you, let me actually read out the query that he has for you on the fundamental side. That's for Tata Alexi. Though his buy price is 750, he's saying, what's your opinion on the stock and the sector, given the fact that there is pressure in the auto space, especially what is happening on the tariff front as well. And also the company is looking to diversify into defense and the aerospace, semiconductor as well. So do you think that it will benefit from the stiff competition that we are actually seeing right now, where everybody wants to enter the space?
Yeah. Yeah, it's a little late. IT services, a large company should have diversified long ago. So now with the whole industry, export is growing in a poor 2 to 4% in dollar term exports. Opportunities are limited in the standalone IT services business. Yes, it coming from a reputed group, it would, succeed, but it is going to take a lot of time. Now, if you look at the fundamentals, right now, FY25 over FY24, almost a net profit stagnated. So my point is that if company is showing a stagnating profit, why one should pay a PE ratio of around 49? So I would, have a research view of sell on the stock, any further possible recovery, even 5-10% recovery, it would be a good sell. And one can look at a stock like Cyient Limited, which is available at a 21 PE and also well diversified already in terms of manufacturing engineering product to its subsidiary Cyient DLM, and also it has floated 100% subsidiary already, and already they claim to have some experience in the semiconductor business, and that's going to be active within a year or so. So considering this diversification across three verticals and cheap valuation, I prefer Cyient to Tata Alexi.
Okay, so that's the take on Tata Alexi. Hope that answers your question. But let's move on. And Kunal, this query is coming specific for you from MSV Raghavan, senior citizen who's writing to us from Chennai, asking about NTPC Green. Is now a good time to buy, to hold for the next 3 years?
I think it's a good time to buy the stock. Retracement back towards its 50-day moving average on the short-term charts. The last 3 months, we've seen a decent recovery for NTPC Green. I think from 84 or 85 was the low for the stock, back towards 120, which was the recent high. It indicates that the momentum has come back again into NTPC Green. So it's a good time where you should look to accumulate.
Coming in on NTPC Green Energy. On that note, we slip into a break on this edition of Buy Now Sell Now. When we come back, continue taking queries. Don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, a show where we get to answer all of the stock-related queries. We have our experts Kunal as well as Mr. Chokalingam to take all of your queries. So let's continue taking your stock-related queries then. And this next query that I have is coming in from Sukumar, and he wants to know about before I go to Sukumar's query, let me take this one actually. REC is the counter. Vijaya Kirti from Chennai wants to know about REC. 500 shares, Kunal, has been purchased, and the buy price for that 500 shares of REC is 606. Should he average or look to hold? What's your take?
I think Mr. Chokalingam mentioned about REC and PFC, that how interesting these valuations for the stock prices are. I completely agree. I strongly believe that I think REC and PFC both at current levels, I think they are like very strong buys if you're looking at from portfolio perspective. So even if you bought at higher levels of 600 thereabouts, I believe that these are quality names, and it's a good sign that these stocks have come back into some moderation at current levels of 400 thereabouts for RECPFC. So I would suggest that both of these stocks are attractive. If you're a long-term investor, you should take this opportunity to try and add or accumulate further.
And accumulate further. That's a technical take on REC. But Mr. Chokalingam, next query is coming in from a viewer, Gatri from Chennai. She's asking if she should sell Sobha and invest in Bharat Dynamics instead. We've spoken about BDL, but would it be a good trade to exit holding from Sobha, which is realty, and then move to defense, particularly BDL? What's your take on that?
If investor is a trader and like tactical investment, then one can. Why I'm saying is that there is no valuation comfort in Bharat Dynamics. Valuations are extremely stretched, and therefore, fundamentally, it is difficult to give a research view of shifting from SOPA to Bharat Dynamics.
Next one is coming from Carol, wants a technical view on Ashok Leyland, holding about 100 shares of Ashok Leyland. Kunal, she's not told the buy price, but what's your take on it? How is it looking on the charts? And if she is in profit or is in money, should she look to exit, or what sort of a strategy?
No, I think you can hold on to the stock. Now, Ashok Leyland is a different, a breed of a chart altogether in the auto pack, because, you have on one hand, for example, four-wheeler stocks like Tata Motors, you have another hand, M&M, which has been a sturdy stock. But then Ashok Leyland is one of the stocks which moves into a very docile kind of an uptrend move. So, the stock moves in its own tangent. There are phases when the stock consolidates or, just about trades in a range. But when the stock breaks out, there's a new range or a shift of range which happens for Ashok Leyland. Again, I'm not sure what's your entry price for the stock price, but my assumption is that if you are sitting in good profits, continue to hold Ashok Leyland even at current levels.
Okay, so that's the take coming in on Ashok Leyland. Let's move on from that. And Mr. Chokalingam, next query is coming in from our viewer, Mr. Manoj from Mumbai. He's got Spark, Sun Pharma Advanced Research at 205 shares at 205 rupees is where he's got it, and he holds 500 shares. He's asking what's the future for Spark, given we've seen such a sharp cut come in on the stock just today. This stock is a buzz today and is in question right now, and our viewer Mr. Manoj is of course facing quite the loss on this holding. Should he continue to hold, or should he book his loss today?
See, for more than 10 years, this company is going through difficult time on bottom line. I don't know, how investors have paid that kind of money to buy the stock. Fundamentally, it is a sell, but then stock has been beaten down a lot. So I would, suggest that if there is any tactical rebound, that may be used to cut down the losses, but otherwise, it's definitely a sell on fundamental basis.
Right, so that's the take coming in on Spark. Let me take this next one from Shaurya, who's writing to us from Gurgaon, wants to know about CDSL. Is it a good time to go ahead and make fresh entry in the stock, Kunal, for a 1 year time frame?
Looks like, I think at 1700 also, I think the stock looks attractive. Recent momentum surge for CDSL. The stock has moved from 1500 to 1700 in a matter of, I think, 2-3 days or 3-4 days. So I believe that yes, the short-term charts could be a little bit overbought, but then these are the kind of moves which spur up the momentum for stock prices over the medium to long-term chart. So a buy as well as a hold on CDSL.
Okay, so buy and hold CDSL. Kunal, we'll stay with you because next query coming in from our viewer Vidya. She's got Siemens June 3500 call option at 50. Would you be able to address this? And she's asking what to do.
See, you can hold on to the stock, the option as of now. I'm not sure the buy price of this 3500 call option. I think the stock is placed at 3300 levels thereabout. So my assumption is that you may have purchased this very recently. Keep a stop loss. I would suggest closer to 28 for this call option. And on the upside, once the stock breaks past about 3350 mark, I think the stock should be good for a target of at least say 95 to 110 kind of a range for Siemens.
All right, so that's the take coming in on Siemens. Let me take this next one. This one is coming in from our viewer, that is Anju, who's writing to us from UAE, and Anju wants to know about UBL, United Breweries, 800 shares of UBL at a price of 147.65 rupees per share. Kunal, what should be the view on this one? What price should she look to exit from UBL is what she's asking.
I think if you purchase at 150 rupees for UBL, then the stock is at 2000 plus. So it's an exceptional mover. If you've bought at those kind of low levels, I would suggest a hold on UBL even at current levels. Then.
Hold UBL even at current levels. Mr. Chokalingam, very interesting query we've got for you next because this stock has hit a fresh record high as we speak. That's Garden Reach Shipbuilding. They have our viewer who's Radhakrishna from Bangalore holds 50 shares and is making a 40% profit on this stock. He's asking if he can continue to hold for another year given the run up that we've seen in defense. But yet again, once again today, almost a 7% uptick coming in on the stock on the back of this MOU that they've signed with a Norwegian company. So what's your view when it comes to the whole defense space and also Garden Reach? And he's asking if it would be prudent to hold for another year. What's your take on that?
Fundamentally not. There is no justification for the valuation, but investors might take technical analysis view because it's also known for extraordinary momentum stock. So fundamentally for me, it's a sell.
So that's a take coming in on Garden Reach. Let me take this next query then, and this one is coming in from a viewer Mahalakshmi, who's writing to us from Hyderabad. And Mahalakshmi is holding KEI Industries, about 54 shares of KEI Industries at a price of 3,480 rupees per share. She's been holding on to this for the last 1 year. The stock has seen a good move up to 5,000 rupees per share at one point in time. But there has been competition. We've heard a lot of them actually talk about how they want to enter the space, a lot of big giants. So wants to know whether she should look to sell and shift to some other company. So what's your take on this one, Mr. Chokalingam? Do you think it makes sense to actually now shift out of it, though she is not making that much of a profit?
Yeah, there will be a threat of a new entry, but I don't think it is going to smash the market share of existing players. They have built a very sizable market share in the last 15 years. So, and the KA stock also already, punished for the competitive intensification. So, I would give a whole recommendation on KA Industries.
Okay, so whole recommendation coming in on KEI. Let's move on. And Kunal, coming to you. Next query is coming in from our viewer, Miss Poonam, who's writing to us from Punjab. The stock in question, in fact, she's asked about two stocks, Aarti Industries and IDFC First Bank. She holds 75 shares of Aarti Industries at 472 rupees per share and 400 shares of IDFC First Bank at 75 rupees per share. She's asking your take on this stock in the near to medium term. What would be the levels that you're spotting on the charts for both of them?
See, for Aarti Industries, I would believe that the stock should be able to surpass the levels of 500 this time around. So maybe in a matter of another 1.5 odd month, I would expect a break of that 500 mark for Aarti Industries. That could be a good trigger point for further momentum. IDFC First Bank, even though it's a quality stock as such, but I would believe that the stock is grinding into a trading range. The waiting period here could be a little bit more higher. I would expect that the stock, at least for the next 1 quarter, 1 to 2 quarters, may just about languish into this trading range of 65 to 75 thereabouts. So if you're an investor with a slightly medium to longish term time horizon, only then hold on to these names.
All right, so that's the take coming in on IDFC First Bank. Let me take this one. Then this one is coming in from the viewer has not mentioned the name, but Kunal is for you because the viewer wants a 2-month target for Bharat Forge. One is, can the viewer buy right now just for 2 months?
Well, I think it's a good price where you can look to start, buying Bharat Forge. Yesterday, the stock was almost on the verge of crossing the 1300 mark. Today, it's back to that 1250 levels. Again, a retest towards the 50-day moving average. I think at current levels of 1250, it's a good buy.
Take on Bharat Forge. Kunal, one last query, if we can squeeze in a near-term target for Deepak Fertilizers. Our viewers asking for this. He holds 50 shares at 605 and wants to know if he can hold for another 6 months. Deepak Fert, 6-month target.
Hold on to perched at a new high. We've seen fertilizer stocks in the last 3-4 days pick up good price volume action. So on the back of it and expecting this momentum to continue for another 3-6 months, I would look out for at least another 10% upside for Deepak Fertilizer. So which means closer to 1700 to 1800 kind of a target range is what you can expect.
All right, so that's the take coming in on Deepak Fertilizers. Let me take this next question, a query. Have we taken a query on Adani Ports? We haven't, right?
We haven't, yes.
All right, so this one is coming from SK Saran, who's writing to us from Bangalore, wants to know about Adani Ports and GMDC. Fair price to purchase. Kunal, sorry, the viewer wants your view on this.
Well, I think it's a good price, good stock to hold on to. Even though it's extremely volatile, but the long-term charts are very much positive for GMDC. My sense is that, once the market also resumes its upward journey, I think the stock should be good for a break above that 400 to 450 mark. So GMDC is something which looks attractive. Adani Ports, something which I believe has been a little bit more sideways. At 1400 to 1500 range, the stock has spent a lot of time. One of the formidable, Nifty 50 names. But I'm not sure whether in comparison with GMDC, I think Adani Ports, could probably underperform. So both of these stocks are attractive, but GMDC could probably have a slight edge purely in terms of charts.
All right, with that, thank you so much, Kunal, as well as Chokalingam. Mr. Chokalingam, for joining us on the show. We're totally out of time on this edition of Buy Now, Sell Now. Thank you so much, Snehi, as well. And for one last time, this is Cheryl D'Souza signing off from Buy Now, Sell Now. It's hard, actually very hard to put into words what these 11 years have meant for me at ET Now. This show, the studio, the screen, my ticker team. I must say thank you so much to my entire ticker team. Monica, you've been awesome. Nikun sir, he's been the pillar. Made sure I am here today presenting to all of you. Must thank Vikram because he's also been a big backbone, a cheerleader of sorts. Thank you so much to my entire PCR team, my makeup team. I must say also thank you to the camera team. There's a lot of times that I've not thanked you all. So yes, thank you so much, Nilesh, Satish, Tushar, Uday. You all have been amazing, great friends. Assignment, the desk, my show producers, Abhishek, Shawnee, Somashri, Shreyansi, Snehi at one point in time, Ruchira. Thank you so much, guys. You all have been great. And for all of you who've been watching me right now, you've been a family. Thank you so much for trusting me, growing with me. And as I move on, very, very heavy heart. Thank you so much. Goodbye, and thank you so much for watching ET Now.
So before we wrap it up, Cheryl, I want to say thank you. I have anchored one of my initial shows with you. You've been a guide, you've been a mentor, you've been a friend, and you've been an amazing co-anchor to work with. I've had the pleasure of working with you on air for 2 years, and other than that, for a little bit longer than that. Lots to learn from you, lots to look up at. Thank you so much.
Thank you so much, Snehi. Thank you so much. Thank you, entire team. My entire team is here in the studio. Thank you so much. I forgot to mention, yes, my guest team. Thank you so much, Sonali, Apeksha, Giselle, as well as Zeenat and Sakshi, 1 and 2. Thank you so much. Thank you all. And thank you, my reporting team. Thank you, ET Now family.
If you like this video, then like, share and subscribe to ET Now.